Are you confident that you're getting the most out of your Social Security benefits? Or could you be leaving thousands of dollars on the table? Most people think they know how Social Security works, but many don't realize there are ways to increase your payout legally. What if I told you that there are simple, underutilized loopholes that could make a big difference in your financial security? Keep watching because today, we're going to explore 5 powerful Social Security loopholes that could boost your income by thousands of dollars. Before we dive in, here's a mind-blowing stat. Did you know that more than 50% of Social Security recipients pay taxes on their benefits? That's right. Half of all retirees end up giving a portion of their Social Security back to the government, even though it wasn't always this way. And yet, there are strategies that could help you avoid paying these taxes, or at least minimize them. But here's the question. How can you avoid paying unnecessary taxes on your Social Security benefits? That's exactly what we're going to cover, so keep watching. Let's start with the first loophole. Taxes on Social Security. When you collect Social Security, the amount you owe in taxes depends on your combined income. The IRS uses a formula that includes your adjusted gross income, half of your Social Security payments, and income from municipal bonds. These figures are then combined to determine whether you'll have to pay taxes on your benefits. Here's where things get tricky. The thresholds for paying taxes are relatively low, meaning most Social Security recipients end up paying taxes on a portion of their benefits. However, understanding this formula can help you avoid it. For example, if you have additional income like wages or withdrawals from a 401k or IRA, this will be included in the calculation and increase your tax liability. But here's the loophole. If you move funds into tax-free accounts like a Roth IRA, you can reduce your adjusted gross income, thus lowering your tax burden on Social Security. This is why it's crucial to plan your finances in a way that minimizes taxable income in retirement. Remember, tax-free Roth distributions don't count toward your taxable income, so consider taking advantage of Roth IRAs before retirement to help preserve your Social Security benefits. Now, let's circle back to that earlier question. How can you reduce taxes on your Social Security? The answer is by shifting your income sources into tax-free accounts. Roth IRAs or municipal bonds are great options if you're looking to reduce your tax exposure. Next, let's talk about the 12-month do-over rule. This one's a game changer. Many people file for Social Security early, only to realize later that they don't actually need it yet. Maybe you plan to work longer, or your financial situation changed. The good news is that you have 12 months from the date you file to change your mind. Here's how it works. If you decide that you started collecting Social Security too early, you can repay the benefits you've received within 12 months, and the Social Security Administration will treat it as though you never claimed it. The benefits will stop, and your payments will continue to grow. This gives you the chance to delay your Social Security and increase the amount you receive down the road. Think about this scenario. You file for Social Security at 62, but then you find a good job at 63. You realize that taking Social Security early might not have been the best decision. With the 12-month do-over rule, you can pay back the money you received and start over. This will let you earn delayed retirement credits, which will increase your monthly Social Security payment once you start taking it again. Now, let's move to another big strategy. Full retirement age voluntary suspension. This strategy used to be known as file and suspend, and it's still available but with some modifications. Here's how it works. If you reach full retirement age and start receiving Social Security, you can choose to suspend it. This means you won't receive your benefits, but they will continue to grow until you start taking them again. Why is this important? Because suspending your benefits lets you keep contributing to Social Security, and this can increase your payment when you start collecting again. Essentially, you're getting the best of both worlds. You're still eligible for spousal benefits, and your own benefits continue to grow. What's more, suspending your benefits can be a strategic move if you're not yet fully retired but want to increase your payout in the future. Just keep in mind that once you suspend your benefits, your spouse cannot start receiving their spousal benefit until you start your own payments again. The next loophole to look out for is the divorced spouse exception to the family maximum. Did you know that your Social Security family maximum doesn't apply to an ex-spouse? That's right. If you're divorced but were married for at least 10 years, your ex-spouse is eligible for spousal benefits based on your Social Security record, and it won't count toward the family maximum. This means that even if you're already receiving Social Security, your ex-spouse can still collect up to 50% of your benefit without reducing the amount you receive. And if there are multiple ex-spouses, each could qualify for their own spousal benefit, making this an overlooked but powerful loophole. Finally, let's discuss the survivor benefit switching strategy. This strategy is a little more complicated, but it can make a big difference. As a survivor, you have the option to claim either your own benefits or your deceased spouse's benefits, whichever is higher. The trick is you can choose to take the higher survivor benefit and let your own Social Security benefits grow. Later, you can switch and claim your own benefits once they've reached a higher amount. For example, if you're a survivor and your spouse's Social Security benefits are higher than yours, you can take the survivor benefit, which could be $2,000 a month, and let your own benefits grow. When your benefits reach a higher amount, you can switch and start collecting your own. This allows you to get the best of both worlds and maximize your Social Security payout. So, what's the takeaway from all these loopholes? Social Security is full of opportunities to increase your benefits, but you need to know how to use them. Whether it's reducing your taxable income, taking advantage of the do-over rule, suspending your payments to let them grow, or maximizing survivor and spousal benefits, these loopholes can significantly increase your Social Security payout. Before making any decisions, always check with the Social Security Administration to ensure you're following the rules correctly and maximizing your benefits. Now, I want to hear from you. Have you discovered any Social Security strategies that helped you boost your benefits? Share your experiences in the comments below. Meanwhile, don't forget to like this video if you found it helpful and subscribe for more tips on how to make the most of your retirement.